So only 15% had an official contract drawn up with their parents.
If they advance the money and there's no documents to support that, then the law will presume that's a gift.
I'm making these contributions and I'm making these repayments, but, what happens in the future if something does go wrong?
Saving for a home deposit, on average, is now taking between 5.5 and 7 years on the average salary. The longest it has ever been in history. So, would you give your kids money to get into the market, or are you the kid who's asking for money? Welcome to Real Talk, realestate.com.au's property news podcast. Today we're talking about the bank of mum and dad, how big it is, how it's showing up in home loans, and more importantly, the possible legal implications for parents who are doing so. Joining me is Matthew Hayes from Mortgage Choice and Stewart Davis, an accredited property lawyer from Davis Lawyers, to chat all about it. Thanks, guys, for coming on the show. I actually have been flabbergasted when researching for this episode, because I actually just had no idea how big the Bank of Mum and Dad has become in Australia. Data from the Australian Housing and Urban Research Institute shows that about 60% of first home buyers in Australia received financial help from their parents, an increase from 20% in the early 2010s. So that's pretty dramatic. This has effectively made the Bank of Mum and Dad the 9th biggest mortgage lender in Australia, with an estimated value of over $34 billion. Matthew, are you seeing more and more parents go in with their kids on bank loans?
Yeah, definitely. There's pretty much been a major increase over the last 12 to 18 months that we've seen. There's different ways that they're doing it, but they're definitely helping out a lot more.
How many on average? Would you say 1 in 5, 1 in 3, even all of them?
Based on our calendar year of 2023, 44% of our first home buyers had assistance from their parents in some way, shape or form.
How does that compare historically? Because you said there has been an increase. What would you say, maybe if you could give us a roundabout of the stats 5 years ago?
When I had a look at our previous data, we were sitting around about only 20% was receiving assistance. And obviously there was guarantees that were being used, like family guarantees prior to that a lot. Nowadays, it's a little bit more, Bank of Mum and Dad helping out with cash or funds.
How are parents doing this? How are they giving their kids money? Are we talking gifts, loans, going guarantor, co-purchasing, or are parents even releasing equity in their own homes and passing that on to their kids?
It's a mixture. I think the main one nowadays is cash gifts, so they'll assist where they can. But a major one we've seen is parents selling investment properties to their children, and gifting them a portion of equity. So say the house is worth $1 million, they would sell it to their kids for $800,000, gifting that $200,000 in equity, pretty much up front.
Even more data from the AFR shows that people living in New South Wales were actually the biggest beneficiaries of the Bank of Mum and Dad. So they received an average of $92,000 from their parents for the purchase of homes. And data from the social media poll we did at realestate.com.au showed that 41% of our audience said that they had help from the Bank of Mum and Dad. Matt, does this line up with what you're seeing with your clients in terms of monetary value, that $92,000?
The percentage of people did. The money's probably a little bit low. We had average of $62,500, but we did exclude one of our customers. One of our customers had $780,000.
That's huge.
That's a whole house.
Yeah, unfortunately, it wasn't a whole house in this case, but it was a pretty large chunk.
But where does that $780,000 come from? If you can share that with us, is that the parents selling an investment property and literally giving them the whole amount, or is it cash they had just had lying around?
In this case, it was the kids were based in Sydney. We're going to have to look at outer suburbs of Sydney, and their budget for loan borrowing and things like that was probably going to be around about $900,000. Their parents owned an investment property in inner city. It was $1.5 million. And so what happened was they, in a sense, sold it to them with that equity cash gift for the difference. So whatever we could get their purchase price for is what they purchased that property for, and the extra amount was gifted to them.
Interestingly, from the same social poll we did, 89% of respondents thought that the Bank of Mum and Dad was very common, but 41% of them said that they actually couldn't buy a home without using the Bank of Mum and Dad. And look, borrowing from your parents does actually come with many benefits. The deposit barrier, which is massive, and it allows people to accelerate their journey into the property market. It also comes with little to no interest. It can help avoid lenders' mortgage insurance, and it can also help you get a property that is more suited to your needs. Stewart, you're a property lawyer and you deal with this stuff regularly. What are actually some of the disadvantages for the parents when lending money?
So I think one of the biggest disadvantages is if they can afford it or not. Obviously, parents want to help their kids, but sometimes things change in a parent's life. For instance, one of the parents may die, the other wants to move into a retirement village. Now, retirement village living is very expensive, so they need access to a large amount of cash to move into that retirement village or also into more advanced care options. It is all very well and good to gift this money or perhaps do it as a loan to your kids, but the first thing you really need to contemplate is what's the financial implications of doing that? Can you actually do that? Can you afford that? And that's where getting advice from a financial planner is very important.
Some other risks that I can think of to parents when lending their kids money, and, it's not just the risk to the parent's financial stability, but it can actually cause things like strained relationships. And then there's that thing of, is it equitable amongst all the kids? There can be disputes in repayments, maybe inheritance issues when the parents do pass away. There might be some tax implications as well. Do you think that there's any disadvantages for the children borrowing money from their parents?
I don't think really there's inherent disadvantages to the kids other than the fact of whether they got there on their own. I think that's more of a social pressure than anything else. Not really from a legal perspective is there too much of a disadvantage for the kids. I mean, it will depend on how that loan is structured. Is it actually a gift or is it actually a loan? They will have implications on the kids' borrowing capacity and how it works financially in the future.
Something I do want to drill down, though, is equitable amongst all siblings, some possible inheritance issues when the parents pass away, and maybe some tax implications. Are you working with more parents who want to protect themselves from these types of things by making it, quote unquote, official with their kids? Because something that really stuck out to me when we did our poll amongst our audience was that only 15% had an official contract drawn up with their parents.
There's a thing called the presumption of advancement, and that's a legal doctrine that basically says that anything advanced from a parent to a child is considered a gift. Now, you can essentially rebut that presumption through documentation. So if you have a loan in place, for instance, attached to a mortgage, that can rebut that presumption that actually it's not a gift. It's a loan and it needs to be repaid back, or that there is interest that is accrued and needs to be paid back. So that's something that parents really need to contemplate and know. If they advance the money and there's no documents to support that, then the law will presume that's a gift. So if the parents just do a handshake type arrangement, expecting them to be paid back in the future, and then for whatever reason there's a dispute or the kids don't want to pay it back, then the courts will presume that it's a gift unless they can do it the other way and rebut that presumption. So it's very important to document it if the parents actually expect to get something back at the end of the loan. If it's just a straight gift, then it's not as important in my view.
Okay, so how would it all work then? How would you go about making it official?
So the easiest way to make it official is by way of a loan agreement. It's not a difficult process to do. You engage a lawyer that has experience in drafting these kinds of arrangements. One thing you really need to contemplate is that it needs to be a different lawyer to the lawyer that you're using as the kids. So a lot of people might say, well, I've already got this lawyer for my conveyance or my property transaction. Why do my parents need to go to another one? Lawyers would be very reluctant to act for both parties because they've got conflicting interests. So one thing you need to know is it needs to be a separate lawyer and it needs to be a lawyer with experience in these kinds of transactions.
Does the contract differ based on the loan type, like whether it's a gift guarantor or a loan?
If it's a gift, it doesn't really need to be documented by way of a loan agreement because obviously you're not expecting it in the future as a parent. If it's a loan, it absolutely needs to be documented. So the interest rate needs to be in there, the term. What I'm seeing is coming into the market that's quite popular with parents is that it's repaid on sale. Interest may accrue if they want it at a lower rate. Probably if you're dealing with kids, that needs to be repaid back when they sell. So perhaps they want to upgrade in 5, 6, 10 years. What they'll do is then they'll say, okay, well, when you have equity from your home and you actually have the ability to repay that loan, what we'll do is we'll get it repaid when you sell.
All parents love their kids, but sometimes the parents don't love the kid's partner like that. Sometimes they don't even like them. So are you seeing more and more parents sort out contracts with their children that kind of protect, I guess, their blood should that relationship dissolve and the house needs to be sold?
if you're going to protect your blood, absolutely need to document it. The other thing is the family law element of it. And now I'm not a family lawyer, but I do know that family law often looks through arrangements like this and will say, well, was this really a commercial loan or is it not? Is it just a fancy gift? And sometimes the courts will actually look past it and then it does form part of the estate from a family law perspective, which means that the partner, so the non-blood, perhaps may have access to it. So it's very important that you get both property advice and family law advice if you really want to protect your blood, so to speak, and make sure perhaps it can't be accessed by the partner that, for whatever reason you don't like or think perhaps there could be a breakdown in relationship in the future.
Matthew, are you seeing this type of stuff show up in how you guys are doing loans for your clients?
Something that Stewart obviously mentioned there was, repayable on, sale, but also we see repayable on separation. For example, obviously the parents have the ability to call on that loan at any point in time throughout that loan contract is something that we see based on the separation. So, for example, obviously if they sell their house for $500,000 and they owed $300,000, but they received a $100,000 loan from, mum and dad, that $100,000 has to go back before the property is separated between the two of them. I think that it does definitely need to be drawn up from that perspective, but it's also sometimes hard from the non-blood person getting involved in the contract because they're like, well, I'm making these contributions and I'm making these repayments, but what happens in the future if something does go wrong?
Stewart, what happens if parents do help kids differently? Like, is it more important than ever then that you do have those contracts drawn up?
Yeah, absolutely. There's lots of examples where perhaps one child will earn a modest income and another child will earn a lot more money. There's instances where the parents were more comfortable helping one child more than the other. There's also instances where essentially they want it equal. So the easiest way to do that is by way of an equalisation clause in the will of the parents. So essentially what that clause does is it equalises the contributions made during life to each of the kids, and then at death, during the inheritance, it's essentially equalised across the parties. So say the firstborn son perhaps gets $500K to purchase his first property. The daughter gets, say, $400K when she purchases her property, when essentially the parents pass away and they have that equalisation clause. The wills and estates practitioner managing the estate will then be able to equalise the money so that both of the siblings get exactly the same amount of money.
Have you ever seen any disaster stories where that's just, completely blown up?
Quite an interesting one. Involved a cult. I acted for the parents. The parents gave the deposit and some money to their daughter through a handshake deal, essentially, that when she sold the property, they'd get the money back. She then got cancer. She deteriorated. She got involved in a cult. This cult's whole modus operandi is to essentially approach people who are in vulnerable positions and then convince them to change their wills. She passed away because there was no documentation. It was just a handshake. It was presumed that that money that the parents gave was a gift, not a loan. So the cult actually walked away with essentially the money that these parents saved for a long time to give to their kids, to, give them a good life, get them a house. And then the cult walks away with it. It could have all been avoided if the proper documentation was in place at the start of it.
That's a very sad story, but that's a real lesson to any parents listening about the actual importance of documentation. Matt, what about you? Like, have you ever worked with a family on a loan just for one of the parties to kind of screw themselves over?
Yeah, I have. There's a scheme that's around where they can assist, obviously, with the first home guarantee by helping, increase their deposit. And so we went through the whole entire process where mum and dad were helping out with a little bit of a gift, just to help to get them to their purchase price. But what happened was when the clients bought the property in New South Wales, obviously their conveyancer ran a New South Wales property search and found that they'd actually previously owned property.
This is the child previously owning it.
Yeah, and back probably about 5 or 6 years previously, the parents had purchased a property in the child's name. And so all the schemes and concessions that were available to them were not available to that child anymore. And so in this case, they actually have to come in and help more from the parents' perspective because they, in a sense, lost access to the stamp duty concession. They had to pay lenders' mortgage insurance. So mum and dad had to come in and help. Now, they did start helping, but it got pretty nasty between the parents and the children because obviously the child was disappointed and upset that they weren't getting access to the schemes. And then the parents were pretty frustrated and annoyed that they had to put in so much money. Now, there was a loan agreement drawn up, and thankfully it was, because from what I understand now, they still don't have a great relationship as a result of it.
Wow, that's incredible.
How much did the parents have to fork in?
For the costs associated, it was about $55,000 from what I remember. Then obviously they had lenders' mortgage insurance. The worst part about it was the relationship breakdown between the parents and their child.
So what's your advice then, Matt, to parents who are looking to help their kids out with a loan, because not everybody has large amounts of cash lying around?
A lot of the times we find that parents are willing to help. However they want to help, they will. The Bank of Mum and Dad has a number of options. It's a loan by way of cash, but it also can be using their property as security. From what we see, most parents have equity, at least some or enough that can assist their children with a limited liability guarantee. It's not a loan, and it means that no money actually gets changed over. As long as the children have the borrowing power to be able to borrow the full purchase price, we can take a small chunk of the parents' property and then put it as security for the children to be able to assist them in purchasing.
So, Stewart, from a legal perspective, what do you think is the most important thing for parents to be aware of before lending?
I think probably the presumption of advancement and also just the financial implications. You don't know what's going to happen in the future. Partners might get sick, pass away, and you may need access to funds, essentially, to fund your retirement. So I think it's really important before you lend money to your kids, you actually know where you are financially and you should get financial advice. I think that's the most important thing. If you're actually expecting funds back in the future, handshake agreements will not cut it. You need to properly document the loan. It needs to, and if you don't do that, then you're just running the risk. Make sure you document it. It's very important.
Do you actually have any advice to the kids before they borrow money?
Absolutely. So I think start early. Full disclosure, I actually used the Bank of Mum and Dad when I purchased my property. And it was a process that started a long time ago. It was starting early, saying, look, this is what I want. This is the position now. It's different to when you grew up, and just explaining to them that the property market's really moved on and no one can really afford it. And if you can afford it, you're in a very, very fortunate position. But look, starting early and then working out exactly how much they're willing to give you or willing to lend you, and then that will enable you to buy the property or look into the range of the properties that you want to purchase. And
what about you, Matt? From a broker's perspective, do you have any advice to the kids before they borrow money?
Yeah, so it's figuring out what you can get. So you have to work backwards. Try and figure out exactly what mum and dad can help with, and then obviously try and figure out what borrowing power is going to allow. At the end of the day, borrowing power is the biggest killer at the moment, especially with the interest rates as high as what they are at the moment. Money's not going far at the moment, so we have to try and work with borrowing power, but then also work with the parents to try and figure out if they can buy something in that range.
I could talk to you guys for ages about this topic because it's actually something I find super interesting. But today I think we've learned, have the conversations early, take the awkwardness out of it, and simply drawing up a legal contract isn't a lack of trust. It's not awkward. It's got nothing to do with strained relationships. It's got everything to do with creating just a safety blanket for yourself and just making sure everyone is on that same page. But thank you both so much for coming on and explaining it from both of your unique perspectives.
Thanks, Alice.
No worries. Thanks for having us.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.